Hi, this is Ian Coleman and this is this week's video analysis for the dollar index and the FX majors going into the week 17th of December 2018. We're continuing to see that move higher in the dollar index. We do believe this is soon to be exhausted. We're going to break down all the time frames, highlighting what chart formations we're seeing, our bespoke support and resistance levels, and obviously what price action we're expecting this week. So I'm going to start off with the dollar index. Same chart as last week basically. We're holding within this wedge formation. We've got a 61.8% pullback level of this downward move located at 97.86. We're looking for that to cap buying. Now last week's price action did post a bullish outside week. That often indicates upward pressure, but it's a far stronger candle formation at the bottom of a trend, not towards the top of a trend. If we go to the daily chart, here we can see that we broke this channel formation to the upside, which we talked about last week. We've then retested the channel, and then we've moved higher. We have actually made a new swing high now, only just on Friday, and price action corrected lower, but we're still looking. Main focus really is here, 97.87, which is an ABCD formation and that 61.8% pullback level. If we go to a shorter time frame, this is the 4-hour chart, we can see that we're just winding up now in a smaller ending wedge formation. The top of this wedge comes in around about 97.80, so we do believe that we're there's still scope for mild dollar buying at the beginning of this week, but we're looking to sell into those dollar rallies. So reflecting that back onto the FX majors, we're going to look at euro dollar first. Weekly chart, 5-wave count, Elliott wave count to the downside. This bullish engulfing candle, which was posted on the week 12th of November, is still holding. We've got mixed volatile trading, and basic consolidation, until we get this change of trend, hopefully. If we go to this time frame, I think this is more important. We're looking for an ABCD formation, okay, and that's located at 112.40. Now, this halt in the dollar buying on Friday has seen just an upside correction late on Friday in euro dollar, but we don't think that's the end of this downward move. Couple of reasons. Firstly, we've got this ABCD. Secondly, we've got that dollar index bias of mild buying going into next week. And thirdly, this looks like a wedge breakout, and the wedge target is 112.67, and we made a 112.70 low on Friday. I know it's close, but they really do have to hit their targets, these formations. So I think for the time being, the bias remains to the downside, but only on an intraday basis, and we're looking to sell into rallies first thing on Friday. I'm just looking at our bespoke resistance. Our bespoke resistance is located at 112.50, 120. Sorry, let's not change the time frame. 113.36 first thing on Monday, so that's around about here. So the downside is limited, and the upside should be limited as well on Monday morning. Cable, we said this was the one to watch. We didn't get our breakout to the upside. It's still a very mixed outlook, but there's a few factors here that I believe still offer an upward bias for sterling dollar. Now, we could see this as a channel formation. That's the dotted blue lines to the downside. Or we could see it as an ending wedge. So basically price action forming this downward move. Let's just have a look at the RSI, which is the relative strength index, and see whether or not we've got any sort of divergence on this time frame. So this is the low. We've actually got a higher low, only just. So we've got a bit of bullish divergence. More importantly, as well, I think, is that this price action from the 12th of December, we've got a bullish outside day. Now, they often indicate the end of a trend and a new upward bias. The third factor why I think we could see some upside pressure in sterling dollar is that if this is a wedge formation and we get a breakout of this level here, which is around about, let's just move it lower because it's going to be bang on the previous high, 126.89. If we get a breakout of 126.89, then the measured move target is here, which is the start of the wedge. So if you just look to the upside here, the start of the wedge is 131.74. We've got bespoke resistance at 131.74 going into next week. So we've got these three factors: the ending wedge, the bullish outside day, and the fact that our bespoke resistance lines up with a target level. We're still pretty bullish in sterling dollar, but we really do need to see a breakout or at least a higher high going into next week. We've actually got bespoke resistance at 126.88 and 126.86 was the previous swing high. So mild upside bias. We need to see a break to the upside. If we do, we could get an impulsive rally to 131.75. Obviously got to wait and see what Prime Minister May brings back from Brussels, if anything. Dollar Swiss, again, quite a difficult one to analyse, but again, we're just working on that limited dollar buying. We've got a Fibonacci confluence area, okay, and it's here, which is around about 10027. So that is a 61.8% pullback level of this sell-off, and it's also a 161.8% extension of this initial rally here. So confluence areas sometimes make Gartley's back patterns, etc. We've got bespoke resistance at 10017, so we could see a spike through that just to this Fibonacci confluence area. But it's a good area, I believe, for next week to get short if you're not already short in dollar Swiss, because we should at least see a correction to the downside. But obviously with that dollar bias, it could be a lot more aggressive than just a correction. Dollar yen, and here I've put a few different numbers on the chart. Now we're in this channel formation. At the moment, we've stopped short of this 261.8% extension level. DMARC, which we use a lot, is showing a 12 plus count on the daily chart. Now we need to get to a 13 count for it to highlight exhaustion. So it's still saying that there's scope for upside pressure going into next week. I've also highlighted this level here because out of this 12 plus count is we've got the 8 candle posted over here, which is on the 3rd of December 2018. Now basically one of the rules of DMARC is that the 13 count has to be above the 8 count. So you can see here that we didn't breach that candle formation. So I believe there's still upside pressure, still looking for it to be limited. 113.85 is the trendline resistance, and then 114.03 is the 261.8% extension level, which is also close to this previous swing high and has been a congestion level for some time. So we could end up with a treble top formation before we move to the downside. Dollar CAD, are we going to get a break higher? Are we just going to continue to consolidate? Well, one thing we should remember as well is that when we do get moves in the market, especially when we're reflecting the dollar onto these different major currency pairs, a lot of the time it's the commodity currencies that move first. So they give us the indication that the turn is happening, and then sterling dollar, euro dollar, etc. They move afterwards. They sort of catch up. Now here we've just seen a period of consolidation basically. We've got bespoke support located at 133.20, channel support resistance at 134.70, and then the 261.8% extension level at 132.56. We are short on a medium term basis. We're still looking for that dollar move to the downside, but we really need to see a breakout of this range to give us a short term bias. And like I said, would like to see a breakout at 133.20 to push us lower next week. Aussie dollar, we've broken this wedge formation to the downside. It's not been impulsive. Yes, we've had another move. We've stalled close to a previous swing high. In fact, this area has been quite pivotal. We've got a 61.8% pullback level at 71.63. We've got bespoke resistance at 72.32. We've got bespoke support at 71.75. So again, we're just consolidating. It is a commodity pair. We haven't got an exhaustion count. On a shorter time frame, I think it's the 3-hour chart, we are posting an 11. So maybe limited downside, but this or even shorter time frames aren't showing any reversal formations at the moment. So it's one to watch. We really need to see a break of 72.32 to at least start to get back some higher highs and higher lows. I'll be wary Monday. We could see a move back up here and then a move down towards the support again to perhaps form a head and shoulders. So this would be the left shoulder, this would be the head, this would be the neckline, right shoulder, and then a move to the upside. So again, we will concentrate on it, and we will obviously highlight you if we see any sort of medium-term reversals. But at the moment, I think euro dollar, sterling dollar, that dollar Swiss Fibonacci level, a better currency pairs to look at the beginning of next week. Euro sterling. And again, I've just highlighted a 12 plus here. This level here, 90.65, is the 8 reading. So basically, for that 12 plus to work, if you like, we have to trade above that 90.65 level. Normally, when we see a pin bar like this, we'd at least have a downward bias. However, if this is an ABCD formation, let's just use this arrow tool. Then we should see a bit more of an aggressive move to the upside. And you've got to remember the ABCD, the CD leg obviously has to break the top of this leg here. So we're still bears over the medium to long term, but I think over the short term we should really breach last week's high, and then we'd look to sell into rallies in euro sterling. Euro yen, difficult one. Unless we get a really aggressive turnaround in dollar yen, then I'm sort of struggling to see using correlation an aggressive move to the downside. But you know, as a chartist and as a technical analyst, this is a symmetrical triangle formation, and after a move to the downside, it has a bias to break to the downside. So at the moment, we are selling into rallies. 128.60 is bespoke resistance going into next week. My concern here basically is that maybe this isn't a full correction, and I don't like triangle formations, whether or not they're ascending, descending, symmetrical, because a lot of the time when you break out, it's actually just a mild breakout, and they don't push to the target levels. And what I'm trying to say here is we've had this aggressive move to the downside. This move up really for me can only be seen in one wave. Okay, we've got this little dip in the middle, but normally, and especially using time, you'd get an A, B, C, D formation higher. So I think, you know, we could break lower and just make a new swing low, and then push back higher towards this 61.8% extension level at 130.64. So we have got a medium-term sell trade idea in euro yen on at the moment. We're going to cancel that. We're going to cancel that now, and then reevaluate this cross early next week. Okay, thanks guys. I hope you've found that beneficial, and we'll speak to you again soon. Many thanks.